Hello traders, Gary Wagner with the Gold Forecast. It is approximately 9 o'clock here in Honolulu, Hawaii. It is the 18th day of January, Tuesday, and this is the Daily Report. Gold is currently trading higher today. On today's report, we are going to talk about a dollar cost average signal that I issued this morning and have sent out the email. We are looking at a quadrant right now of charts. And let me quickly go over what these charts are. They're pretty easy to discern. I've got our daily chart here. This is in candlestick format. Our daily chart here. This is our Henkin chart. And these are simply intraday 60-minute charts here and here, Henkin and candlestick. Of particular interest, and this is what we'll talk about today, is this inverted hammer which followed yesterday's doji. That's what's giving me the emphasis and the information that I really wanted to see to be able to feel comfortable the dollar cost average. As you can see, as the market did go up, we're going to go back to our 60-minute right down here, the Henkin chart. We had a nice trend, but as that market came up, we did hit resistance, and the resistance that we hit was up around these highs at about 1376. And what is giving me a belief that in terms of timing this might be good is that as these body sizes begin to narrow in range here, and the fact that we have this inverted hammer and this really variation once again of that Three River Morning Star. That's the pattern that I look for, that combination of black, star, white. As you can see, we have this black, star, white once again. So that will be the focus on today's daily report. Traders, of course, the big news today is the relative weakness of the US dollar. What I've done here is this is a dollar index chart that I have just put up, and it is in terms of duration, it is a 60-minute candlestick chart so that you can see that each day is benchmarked on the bottom right here. And the big thing that we're looking at is the market was kind of tentatively holding right at around the high 79 area, 79.60 as those highs. This was after this tremendous historic fall from about 81, and that of course was right after the beginning of the year. At the beginning of the year, the dollar showed some strength as it broke out of this one little area right in here and began to trade higher. Of course, then we had this big sell-off and then the consolidation. Well, last night we did get the market drifting much lower. Critically, it broke below these areas right in here, as you can see, and formed a new low on the market. That's what gave us such concern on the dollar index. If we take a look then at the reaction, of course, when we take a look at how gold reacted, it reacted in the same way. But as I said, what I'm finding interesting now is this combination of candlesticks that we are getting. Yesterday's activity did give us that doji. That's that consolidating candle that we always kind of look for. The way that I like to think about it is if a train is going down the track and it's going between two cities, Los Angeles and San Diego. It's just left Los Angeles, it's barreling down the track, and it's going to go to San Diego before reversing and going back to LA. Before it goes to LA, it has to do something, and that's slow down. It has to stop. And the doji, to me, is the market's visual illustration of a stop sign. It's that consolidation that gives it so much power in the market, because you can see that that's really the turning point between the bullish faction and the bearish faction, those that think the market's oversold and those that think the market is overbought. So that it is at this point when you get follow through, and follow through is always going to be either a long red candle or something that is indicative of a market that's bullish. Now, one of the candlesticks that we look for in terms of turning points in the market is also this inverted hammer. Now, an inverted hammer is also called a shooting star if found at the top of the market. But as I said, what I found that's interesting is that, you know, the bottoms that we pick, these combinations that we see here, these are trades, past trades in the marketplace, all of the ones that I'm circling. And you can see that all of the things that I'm circling have that combination. That combination is something that I look for. Now, on this last play that we had, it did move higher, but it was not able to sustain the rally. And that's where it got up to this one area. We still maintained our long position because I was looking for the market to hopefully go and test 1400. It absolutely did not. So again, traders, I've already issued the dollar cost average signal. That went out earlier this morning as promised. All major buy and sell signals will always go out as a separate report because the time that it takes to compile this report will sometimes not allow everyone to get involved in the market. This has been Gary Wagner wishing you, as always, good trading, and we'll talk to you tomorrow for another daily report. Bye-bye.